Ladies and gentlemen, I am happy to finally announce that Bitcoin has moved to the upside, broken to the upside of its descending wedge formation it's been seeing since the first retest for top in around April, around 2.5 months, 3 months from the bottom here in around March. So 3 months of consolidation, 3 months of descending wedge. It's finally broken to the upside, and it actually did it against the odds as well. And the reason why I did it against the odds, not in terms of the actual directional move, I mean, it was pretty certain, not certain, but it was likely to break to the upside because of the structure itself is a descending wedge formation. It's a pattern of continuation, and we moved up into it, of course, and so the correction within the wedge was all natural. We were expecting a move to the upside, but the way it actually happened was pretty interesting. I discussed yesterday in yesterday's video that we had this pink ascending wedge formation. And of course, an ascending wedge formation, unlike a descending wedge formation, is actually a bearish structure. So I was actually saying that it would be, probably make sense for us to move downwards to a retest the bottom of the wedge and then go upwards and break up on the next move upwards. That's what I was saying yesterday. Unfortunately, fortunately, to be honest, we defied the odds and Bitcoin managed to break upwards there. Look, I stand by what I said yesterday. I think at the time that was the most objectively likely thing to happen, but sometimes things just happen. And, this break to the upside has happened on news of more ETFs, more major hedge funds coming out and announcing spot ETFs filings, applications for Bitcoin, including something called Investco, which is a $1.6 trillion hedge fund there, announcing a renewal to their spot ETF application. Of course, we've got BlackRock as well doing the same thing, and BlackRock's one of the biggest, probably the biggest, if not the second biggest, followed by Vanguard, or following Vanguard in the world in terms of hedge funds. So that's huge stuff here. So massive news there in terms of from an ETF level. And, I don't want to discuss regulation too much from this channel because I do worry about the platform that I'm speaking on in terms of censorship. But I think that it's not necessarily a good thing in a fundamental perspective, because when you have ETF filings and we have all these ETF filings recently and we're having restrictions on exchanges at the same time, and I think we're going to end up in a scenario where the main way people buy Bitcoin is through ETFs, in which case they don't really own their coins. But regardless of that, if we're looking from a price perspective, it's very good because it gives access to more people to the market. So from a price perspective, it's good. From a fundamental perspective, it's definitely a gray area. But look, big breakouts here, breakout from the wedge. If we do a measured move from a descending wedge formation, there's a couple of ways you can do a measured move from a descending wedge formation. One of which is taking, from the last leg down to the top of the wedge and applying it to the breakout point. That's one way, and that would target up here at around 38.38k, and that's convenient because 38k actually is a resistance level that has historically been pretty prevalent, especially on the weekly chart, which we'll look at in a second. But a conservative way, and I like to be conservative, is measuring from the first retest to the bottom of the wedge to the first retest to the top of the wedge and applying that to the breakout point, in which case we're about halfway to the target. And the target actually lies perfectly, and you could say it's a coincidence, but I don't think it is. The target lies perfectly at 31.4k, and 31.4k is basically one of the stronger resistance levels at the top of the range we've been seeing since around May 2022. We got that range rejection there, went deeper into the range. Now we've come up to the top of the range, we rejected from the same area, and now we went deeper into range, and we're probably going to come up and retest the top of the range again. So it's pretty convenient that the wedge is targeting that level there. So it should be interesting to see where Bitcoin goes in that regard. I don't want people to get ahead of themselves at this point in time. Yeah, we've seen a breakout to the wedge. Yeah, that's big news. But I do want you to just kind of ground you guys and level you guys as to where we actually are. I think that the weekly chart has seen some great progress. Breaking the wedge on the weekly chart has been strong, and we've bounced off the bull market support band. We've broken back above the 200-week SMA, which is great news. And we're finally edging out of the Gaussian channel. And the reason why that is important, let me remove everything and show you, is because there is a very strong trend with the Gaussian channel. I've been speaking about this trend for a long period of time. Not many people talk about it for some reason, especially the bears. They don't like to talk about it. It's a trend in which when we enter the Gaussian channel, okay, when we break below the center line or break above the center line of the Gaussian channel, we generally move through in that direction. For example, we moved into it from the upside, we moved through to the downside, into it from the upside, through the upside, right? So we move through the Gaussian channel very smoothly, and we see dramatic moves and big moves other than COVID, but even during COVID, we saw a massive wick. And that's without fail. We've seen that every single time. And we've actually moved into the Gaussian channel. And so, this wedge was a bullish consolidation. And we can expect, as per this trend, for us to move through the Gaussian channel to the upside. So, macro scale and weekly chart, Bitcoin looks very bullish. There's no doubt about that, especially weekly chart. But the one chart that I'm still kind of holding a little bit of concern about, not necessarily concern, but I'm monitoring it, is actually the monthly chart on Bitcoin, and we're in good territory here, because the main bad thing about the monthly chart that we saw really was the bearish engulfing candle and the evening star candlestick formation. Bearish engulfing candle here, evening star candlestick formation in these three recent candles where we saw that doji candle at the top and a red candle to follow. That generally represents a top and hence a downwards trend forming. But we seem to have defied the odds here with a nice little bullish hammer, and we've gotten back above the closing level of the last monthly candle, and so we're kind of invalidating that bearish candle. What we need to be seeing on Bitcoin really is a monthly candle close above 27.2k. That is our target. Ideally, we want to see a monthly candle close above 29.3k, and that would actually break this resistance level that we last rejected from. That would be the absolute best case scenario. If we get a monthly candle close above 29.3k, I would say that is another buying range for Bitcoin. If you haven't already bought Bitcoin, that's probably where you do it. And at this point, you should have probably bought Bitcoin by now. Of course, I mean, our average buying price in this channel was 18, 19, I think 19k, something like that. So, but look, if you haven't, or for some reason you haven't, you want to stack more bags, you probably wait for that monthly candle above that red line there. That's probably where you'd be looking to do it from a macro perspective. Or at least that's where I think it would be safe to do so conservatively. So, we do have still a little bit of time in the monthly chart for that to play out. We do want to be seeing a close above 27.2k at the bare minimum, and ideally above 29.3. Given the wedge breakout, it would be a bit of a disappointment if we didn't get above 29.3, to be quite honest with you. I mean, we're basically there already. We're at 29 right now, so it's not too far away, just another 300. We've also broken, not only the wedge, but we've broken above the downtrending line on the RSI for Bitcoin, which is great as well, and that generally leads to a move to the upside in the price. So I'd be slightly surprised if Bitcoin didn't manage to get the best possible monthly candle close above 29.3k. I would be surprised. I hope we can do that. If we do that, it's a massive show of strength, and that probably means that Bitcoin's actually got upwards further to go before the halving. And, the reason why that's interesting is because the halving's always been an interesting question. We've always kind of, and excuse this chart being a bit messy, guys, but we've always kind of wondered what Bitcoin's going to do in regards to the halving. And that's because we don't really have much historical data from this point in the cycle. Now, as you guys know, all of my predictions, macro scale, kind of rely, or not really rely, but depend, I guess you could say, that they're based in the 4-year cycle theory. 4-year cycle theory is anything but invalid. It's very, very valid at this point. In fact, it's been playing out perfectly to the T. But the thing about the 4-year cycle is we don't really have any data. Well, not much data. We've only got 2 cycles that I'm circling now from the period in between bear markets and bull markets. For bull markets, we have 3 sample points. For bear markets, we have 3 sample points, okay? 2014, 2018, and 2022. But for the in-between period, we've only got 2 sample points. And 2 sample points isn't really enough to make an established trend. So we've kind of been in the dark with Bitcoin as to what it's going to do between now and the halving. The halving is just about 10 months away. We've got a bit of time to kill. And so, Bitcoin can realistically do whatever it wants, but given this wedge breakout, it kind of leads me to believe we could be seeing, and look, I don't want to say too much now, I want to wait for that monthly candle close, but it does lead me to believe that we would be seeing a similar upwards kind of period, just like we did see in the last cycles. Now, from the bottom to the halving in 2015, we saw a 375% gain. From the bottom to the halving in 2018, we saw a 351% gain. And if we see something similar, and again, this is not confirmed at all, it's completely speculative, we would actually be brought all the way upwards to around that 60k region, close to all-time highs. Now, this is kind of problematic because a part of the 4-year cycle, and it's not an established trend, we've only seen it twice, is that seems to be either it's a coincidence or a trend forming where we have a pretty tightly packed kind of a trend between all-time high to all-time high. We saw 1,400 days from all-time high in 2013 to all-time high in 2017. We saw the same amount of days from all-time high in 2017 to 2021. So if we're following that trend, it's kind of a question of which trend do we follow, right? I hope you're following what I'm saying here. It's a bit complicated. It's a question of which trend do we follow. Do we follow the trend in which we see a 300% gain from the bottom to the halving, which we've seen twice, or do we follow the trend in which we see 1,400 days from top to top, from all-time high to all-time high, in which case we wouldn't see an all-time high until around October 2025, and at that point we'd see a blow off top, right? So, or at least we wouldn't see sorry, I'm getting confused here. At least we wouldn't see a brand new all-time high. I suppose we could see, a top, I should say. We could see, certainly, an all-time high above 60k or 64k in between somewhere there. But even that could be a trend in itself. We've got from the top here in November 2013, we saw around 1,200 days until we breached all-time highs. And from the top here in 2017, we saw around 1,100 days. Again, similar things there until we breached all-time highs. And that happened after the halving on both occasions. So, for us to see a 300 something percent gain between now and the halving would kind of be a little bit out of the ballpark in comparison to what we've done in previous cycles, even though the percentage gain is on par, because we haven't necessarily ever breached all-time highs, okay, until after the halving. And now, if we follow this trend, we would expect to see it at the halving. I hope that makes sense. I feel like that doesn't make sense, but look, I think you guys understand the point. I'll try summarize it here, so if you didn't know what I was saying there, if I was speaking gibberish, I'll summarize it. What I'm saying is, Bitcoin is in no man's land until the halving. We're not sure what's going to happen until the halving, but we probably are leaning a bit more bullish now, and we probably would go a little bit higher. The problem is, how high we go is kind of conflicting between other parts of the cyclical theory. So it's kind of like, it's hard to say because there's not really any established trends. It's just kind of still in the dark. So yes, we do have positive indications coming from this wedge breakout, but we do have other micro trends like all-time high to all-time high and all-time high to fresh all-time high, not the top, but fresh all-time high, that kind of say that Bitcoin won't be breaching 60k or post 60k till after the halving as well. So I hope that makes sense. It's very confusing, but essentially we're in a gray area right now. There has been some positive progress. As for short-term price action, I do want to note that Bitcoin is probably going to be seeing some resistance in this region, even that we're at right now. And the reason being is because even on short term, we're seeing starting to slow down. Sending channel formation forming here on very short term charts. 15-minute chart would show a potential correction coming. And then we have also Ethereum facing strong resistance and total cryptocurrency market cap facing strong resistance at the RSI line. So, who knows? We could see a short pullback here. I don't think it would be substantial. I think that it'll probably come back to this, 28.6 level, potentially a little bit lower, and then we'd kind of reset and come up for another move to the upside. I do ultimately think, as I said, that Bitcoin will close above 29.3k in 9 days at the monthly candle, and that's all that really matters. Bitcoin dominance is moving as expected. It's moving very strongly to the upside. This is what you generally see during the accumulation period between the bottom and the halving, and it's all on track there, and that's another reason to believe in the cyclical theory, because Bitcoin dominance is a major part of cyclical theory, as the cyclical theory, which controls the entire market, obviously has a basis on Bitcoin. We're seeing a massive amount of dominance, not only in the Bitcoin dominance chart, but also in a chart measuring kind of volume between altcoins and Bitcoin. Starting out at 25% this year, it's got up to 32%, which means a lot of the volume and an increasing amount of the volume in the market is directed towards Bitcoin, as it was directed mainly towards altcoins at the start of the year. So Bitcoin dominance rising, cyclical theories on track, wedge just broken out to the upside. Everything's looking pretty golden. Could see a short-term pullback, but ultimately I do believe the monthly candle will be quite good. Weekly candle's looking good as well. That's closing in 4 days. We've also seeing a golden cross come in on the 3-day chart. We don't really see fake outs when it comes to this kind of thing. Golden crosses generally lead to upwards price action. The price generally front runs the cross, and so the positive price action we're seeing right now is probably the effect of the incoming cross. And when the cross happens, it's usually it's a non-event, right? We saw the def cross over here, and by the time we saw the def cross, we were already consolidating. So with the drop that happened, presumably because of a def cross, already occurred, right? People predict them happening. I can predict, for example, that this golden cross is going to happen. It's pretty much unavoidable, and hence I would rather act now rather than wait for it to actually happen and then act. And that's what the entire market thinks. And if the entire market thinks that, the effect of the golden cross is going to happen before the golden cross actually occurs. So we're seeing that move now. I think that's the effect of the golden cross, and so we could probably stop talking about it too much now. But we did discuss that yesterday just before the move to the upside, and that was good. So guys, good progress on Bitcoin for sure, and we'll monitor the progress of it over the next few days as the breakout progresses. So I hope you caught some of that move. I was saying for the entire period here, literally the entire period, that this was a healthy consolidation, and obviously lots of bears sitting up there in the comment section saying, no, we're going to 10k. Well, they're not too loud now. I mean, this is pretty clearly a healthy consolidation. It's a bearish, it's a bullish descending wedge formation. We broke to the upside. Everything there is as expected. The targets we're seeing now and the real challenges we're seeing now, and what we really need to be watching now, all stems really on the monthly chart in that 29.3k level, and at a minimum closing above 27.2, which we're already above. So we just need to hold that support. Thank you guys for watching. Let's check out a few things. Bitget exchange, guys, lowest fees in the market. We're seeing some troubles with Binance, some troubles with Coinbase. It's time to find a new exchange. Bitget is the one you need to find. No legal troubles on Bitget. 5 times lower fees than Binance. Lowest fees in the market for futures trading, or amongst the lowest fees in the market for futures trading. You can get a further 15% trading fee discount using my referral link. US users are welcome on the exchange, but they cannot KYC. You can sign up using a VPN, and you can use a VPN on exchange, be a non-KYC customer, as you can do with any country. It's a non-KYC exchange. It's optional KYC. So go ahead and sign up using my referral link for that discount and reward, and that's a good way to help yourself and help the channel. Crypto Academy course, if you want to learn how to trade, guys, the Become a Trader 10-unit course is for you. All the information about the course is on the website, as well as the email contact. This email address here, you can use email us and ask any questions you have about the course, and also request the information, the payment information, also a video walkthrough so we can show you the course, and you can make an educated decision as to whether you think it's for you before you actually purchase. And then finally, guys, the VIP group on Telegram. We trade altcoins 3 to 5 times a week on there. We've been extremely profitable. In the next 9 days or so, when it flicks over to July 1st, we'll release the trading results for this entire quarter. We've released our trading results for every other quarter we've done, which is Q4, Q1, and now we're coming up on the end of Q2. So all of our results are released. We're very profitable in there, and you can check out all the information in the Telegram information group below. Thank you guys for watching. I hope you enjoyed the video, and I'll catch you in the next one.